White House trade policy risk is on the rise. First, on China, the White House is on an escalatory path, and the White House will follow through with the threat to impose tariffs on up to $200 billion worth of Chinese imports. The White House could even escalate that threat to try to cover all of Chinese imports. That's a threat that most likely would be levied after midterm elections pass in November. Even as the two sides try to feel out a negotiation, we don't expect a breakthrough in the trade negotiation between the US and China this quarter. That tension will remain. Now, the other big aspect of trade risk comes in the White House's threat to impose tariffs on automobiles and auto parts. There are several ways now to break this down. That threat will be best mitigated through the NAFTA renegotiation. We expect the NAFTA trilateral pact to survive. Congress will ensure that this quarter as well, despite all the drama around the talks. And when we then look beyond NAFTA to other countries impacted greatly by those potential auto tariffs, in Asia, South Korea is going to try to rely on its chorus talks with the U.S. to try to mitigate that threat. It's a 50-50 shot on whether it can. Japan also may be pressured into a bilateral trade negotiation with the U.S. in trying to lower that auto tariff threat. Now, the prospects for neutralizing the auto tariff threat look bleakest for Europe, and that's bad news for Germany in particular. That's because the White House's obsession with reducing its trade deficit is simply not going to align with the EU's offer for a limited industrial trade deal. And so that's where we expect this auto tariff threat to still transpire when it comes to the Europeans. That may not happen this quarter. In fact, those negotiations are probably going to extend into the next year. But ultimately, we think those EU-US negotiations are going to hit a big wall. Global oil supply will also be strained this quarter, and of course, a big driver of that is when U.S. energy sanctions on Iran snap back November 4th, and we're already seeing Iranian oil exports drop at a very rapid rate. That means expect a lot more White House pressure to come down on its Saudi allies to increase production and try to rebalance the markets. Saudi has the spare capacity to do so, but it'll be cutting very deep into that spare capacity. So any moves by the Saudis are going to come at the cost of limiting its ability to respond to other potential supply disruptions in volatile places like Venezuela and Libya. We're also watching several high-risk areas for financial markets this quarter. That trade risk from the White House is going to still take time to play out, but the Federal Reserve remains on a tightening course while other major central banks take it slow. That means overall a particularly stressful quarter for economies like Turkey, which will also be dealing with high energy prices and expensive imports. And so Turkey is going to still be shunning that traditional Western IMF route, seeking non-Western alternatives for support. Pakistan as well is another one to watch. They'll be seeking a big loan, likely from China. Meanwhile, in South America, while Brazil is heading to very consequential elections, in Argentina, the president is effectively committing political suicide by sticking to an IMF plan. And meanwhile, you've got countries like India, South Africa, Mexico taking a more populist route, which means more fiscal expansion, less fiscal prudence overall. In the European Union, meanwhile, we see a confluence of risk factors here in watching the Turkey risk, rising Brexit risk, as well as Italy risk. Now with Italy, even as Italy's moving back down an expansionary fiscal route, we still expect ultimately for Italy to remain somewhat responsive to market pressure and to remain within EU budget deficit rules. When we look at White House foreign policy priorities this quarter, first on North Korea, while we don't expect a complete breakthrough in the negotiation, we're also not going to see a total breakdown in that dialogue. Now, familiar threats are going to resurface as the two sides hit their sticking points, but the White House is not going to revert to a full military standoff with Pyongyang this quarter, and North Korea, meanwhile, can sustain the diplomatic momentum by relying primarily on its regional neighbors. Then, as the White House is trying to balance that North Korea policy with an increased focus on Iran and with sanctions snapping back this quarter, we can look to the White House to escalate other elements of that pressure campaign against Iran in league with Saudi Arabia as well as Israel. When we look at U.S.-Russia negotiations, Russia is really going to be trying hard to advance a proposal on Syria this quarter, but really the limits of its influence in that battleground are going to be exposed in a big way. We still see arms control as having the best chance at incremental progress progress between these two powers, even as sanctions, increased sanctions from the U.S., sour the negotiating climate overall.